Welcome to the I.D.E.A.L podcast with Ben Reinberg.
Welcome to the I.D.E.A.L studios. We are live today in Laguna, California. Today's guest is someone special to me. He's in my industry, so he's on a different side of the industry, but extremely talented and well-versed in real estate. He is the founder and CEO of Platinum Properties Investor Network. He is the founder of the Hartman Media Company and the Jason Hartman Foundation. And he also has a phenomenal podcast. If you've never listened to it, it's called The Creating Wealth Show. And it's a podcast leader for investing with success. Jason, welcome to the show. It's a pleasure to have you, and thank you for joining us.
Hey, Ben, the pleasure's all mine. It's good to be here.
Thank you. Obviously, we're both in real estate. I'm on the commercial real estate side. You're more on residential investing and have a lot to offer our audience. Let's take a step back. So at the age of 19, you embark on your career, and you start off and you put together a residential brokerage firm in Irvine, California, in Orange County. Tell me about what intrigued you about getting into real estate. What was the genesis of creating that company, and where you took it?
I'm sure you'll agree, and many of your viewers and listeners will too, Ben, that one of the major keys to success in life is to deal in assets and businesses that have leverage. Leverage is an extremely powerful tool, and income property offers leverage really better than anything else, whether it be commercial or residential properties. The ability to buy more than you can afford, essentially, right? That is very powerful. So if you're buying stocks, bonds, mutual funds, cryptocurrency, and so you can either buy smaller assets or you can you just don't grow as much, right? But with income property, you can buy 4 to 5 times, or maybe more in some cases, what you can afford. So it gives you this ability to kind of punch above your weight, as the saying goes, and really grow a lot faster. Very, very powerful tool. It's a great inflation hedge. I call it the most historically proven asset class in the world, the most tax-favored asset class in America, and also, interestingly, in a good way, the most debt-favored asset class in America. And that's what I mean by leverage.
So you spent years educating a lot of non-professional investors on what it takes to be successful, how to invest in residential real estate as an investment. What have you learned as you go through your process over the years and you look back? What have you learned from educating and teaching the public about investing in residential real estate?
I saw people making over and over again. And I thought with sort of a framework, you could really help people avoid mistakes. And obviously, there are so many things we all learn doing something day after day after day, right? There's a lot of stuff we learn. And most of it, frankly, we learn from our clients, right? If we're in the business of helping other people do something. But if not, we learn it by doing it ourselves.
Mm-hmm.
And that's the best way to learn. Books are great, courses and conferences are great. All of that stuff is great, but nothing can replace actually doing something firsthand. Attention follows money, and if you have your money in a deal, you're gonna pay attention to it. And you bring a whole new you to it when you do that. But I guess to sort of answer your question, maybe the biggest thing that comes to mind is that we as investors, we get in our own way. We are great at sabotaging ourselves. and it's just part of human nature, I guess, for really the history of humanity. We lived in an environment of extreme scarcity, and only the past 100 years or so, or a little over, since the Industrial Revolution, really have we lived in this environment of abundance. And if you walk around any town, you can see most people have too much abundance in their belly, right? And so we live in this abundant environment. And that has to change our investing strategy.
Mm-hmm.
One of the other big things I'd say is that people listen to programming, usually from
Mm-hmm.
parents and grandparents, who were playing by a different game plan. And what I mean by that is that the game changed and the rules changed in 1971 when Nixon took us off the gold standard.
Mm-hmm.
That's when everything really changed. But, if you're 40 years old today, for example, right, you grew up with parents and you probably
Mm-hmm.
knew your grandparents, or maybe they're still around, and their whole mentality was save money. That's how you get ahead. You're going to save money. You're going to be conservative, not go into debt. And that was true until 1971. That's when it started to change. And as inflation grew, and bad fiscal and monetary policy really took hold, as the worldview of not only the United States, but the entire world. The game changed, the rules changed out from under people, but they were still playing by old rules.
So are a lot of the pitfalls you see when these new investors come in and say, Jason, teach me how to invest in real estate? Is the biggest obstacle fear of, where they're struggling to pull the trigger on maybe an acquisition, or they don't have the resources? What is some of the challenges you see with investors that want to come in and invest in real estate when you teach them?
The things I mentioned, and yes, fear, or FUD, fear, uncertainty, and doubt, that clouds all of our minds. There's no question about it. But I don't know how anybody could argue that over the past years, and even more so into the future, that you wouldn't be better off holding assets than holding dollars,
Mm-hmm.
because dollars are the sure loser. They are the sure thing to depreciate. Now, compared to other currencies, because one of the most important questions anybody can ask is compared to what? Compared to other currencies, the dollar is actually doing pretty well. But compared to other things, compared to stuff, compared to other assets, the dollar is doing terribly. And it has a very bad track record, specifically since 1971,
Mm-hmm.
owning assets, much better track record, right? So
Right.
if you think about it, when we're real estate investors, if one of the things people rarely understand is that when you buy a property, Ben, you're not really buying one thing, you're buying two things. You're buying the land,
Mm-hmm.
and then you're buying the improvements sitting on the land. So
Right.
maybe that's an apartment complex, a single family home, an office building, a retail center, or whatever, right? It's
Mm-hmm.
improved land. And that improvement has certain ingredients, just like a cake, right? A cake has certain ingredients. Well, the improvement has ingredients. So if you look around behind you and behind me, what do we see? We see lumber, we see petroleum products, we see glass, steel, we see copper wire in the walls. We see all of these things. We see concrete below us. You've got bricks behind you, and all of these commodities, right, have intrinsic value. It doesn't matter what currency, what money unit you attach those to. It could be the yen, the euro, the dollar, the peso, the Brazilian real. It doesn't matter, right? They have intrinsic value, and every human on earth needs those commodities. So that's what I want to own.
I agree with you. I mean, the other thing that people don't take in consideration, especially in our industry, is the tax benefits. And I tell people, if you can find a better investment that can provide cash flow and tax benefits, let me know. I'm happy to invest in it. I still today, being a young 52-year-old man, haven't found a better investment vehicle. So obviously, like you said, having improvements that you can depreciate and interest expense, and taxes are just a huge, tremendous benefit, where I can pay tax on, say, 85 or 90 cents on the dollar instead of the full dollar I received. And a lot of investors, hopefully you're out there listening, the fact that you can not only invest in a hard asset but also have tax benefits is really a tremendous benefit. And then you throw on the leverage that Jason just mentioned. It's really a way to really increase yields and protect your investment.
No question about it. I'm so glad you mentioned that, because as I mentioned earlier, income property is the most tax favored asset class in America.
Mhm.
And taxes are the single largest expense in most people's lives, right? Most people, that's the biggest expense they have, right?
That's
It's bigger than their housing expense a lot of times.
mhm.
And it's funny to me that people will spend a lot of time and do a lot of research when they want to buy a new car or they want to buy a new computer, right?
Mhm.
But the biggest expense they have, taxation, right? They spend very little time learning about that because it's boring. I get it, but you get excited about it when you see all the money you can save.
Right. Oh, absolutely. It's a huge component of our industry and learning about it. And I think when you master it, it makes life a lot easier. And that's why I believe it's the best asset class to invest in, just like you do as well. So you've made a lot of money in this industry like I have, and you've had a lot of success at a young age. So telling your investors, when you create success, what motivates you? Like a Jason Hartman, how do you get up every day and say, all right, my feet are on the ground. I'm going to kick some butt. Let's do this. Let's move forward. What motivates you?
Well, I like learning things and teaching things.
Mhm.
That's really, I think, my sort of superpower, and I just love it. I love doing it. I love seeing the benefits it brings to other people. Certainly, the money isn't bad, but I stopped working for money a long time ago. Now it's more a passion thing. But either way, it's just a fun game, right? And you really do make an impact, and that's impact, contribution. That's what hopefully we're all interested in once we've achieved financial freedom.
That's great. You have an incredible personal brand, and I could see the podcasts that you've had. You've had thousands of episodes with yourself and other folks that you've interviewed. Have you learned and said, this is really my next life is serving people and helping people with my knowledge? I'm still able to invest in real estate, still make an impact and teach people, but is really the personal brand that you have in your podcast like a labor of love for you?
Yeah, no question about it. It is. I mean, sometimes it feels like a lot of work, but what else? What else am I going to do? Right? Lay on the beach?
Right,
That's not going to
right.
be. That'll be fun for a little while, but not that long. At least not for me.
Let's go back to real estate because a big topic these days, and is inflation. And I believe inflation is not being correctly reported. When you really dig in and you look at the data, I think we're probably in double digits right now, and most people don't want to talk about it.
Yeah.
You mentioned, and I agree with you on this statement. This is one of the best statements you say. I mean, you have a lot of great statements. Is inflation is an investor's friend.
Right.
And I think that's important in these days of the inflation that we have in front of us and what's going on in the United States. Explain what you meant by that, because I think it's so important to share that knowledge.
I've created a strategy about 18 years ago. I call it inflation induced debt destruction. I know it's a mouthful, but it really does explain it well, Ben. Inflation induced debt destruction. And basically, this is the hidden wealth creator that very few homeowners and investors really even realize they have, right? This is benefiting them sort of behind the scenes. If you looked at it like an iceberg, right? As the old saying goes, most of the iceberg is underwater, right? And
Yeah.
and most of the wealth creation that goes on with income property is underwater, right? In a good way. You don't see it, but it's working for you. And I can share some examples of that, but maybe just one that I can share quickly if you want to show my screen, and then
Sure.
we could take a deeper dive into it later in the interview. Yeah.
Oh,
You were
yeah.
there. Yeah, there you go.
All right.
So most people think, they're very concerned about the increased interest rates. We've had a huge bump in interest rates recently, and that causes concern, rightfully so. But I think the most important thing to understand is when you compare mortgage rates to inflation, you
Mhm.
really get kind of a different outcome, right?
Mhm.
So I'm always saying this, and you've probably heard me say it, Ben, on the podcast. Compared to what? And I think this is really life's most important question. I say it so often. My listeners dubbed it the Jason Hartman question. Clearly, I did not invent this question. I just think it's a really
It's a great question.
you go out into the world, and how do you know anything? How do we know anything? How do we know something is good, bad, safe? How do we know, that a person we're attracted to is beautiful or handsome or ugly or, repulsive, right? We only know this all by comparison, right? We always use comparison. We are comparison creatures. So let's compare interest rates to inflation. And this is so rare in history that this happens, okay? But it's happening now. So the government tells us that inflation is about 8 to 8.5%, according to the highly manipulated consumer price index. But the mortgage rates are about 5.5. Actually, they're a little bit lower right now. And so that means when we borrow money, we pay it back in cheaper dollars because inflation has debased the value of the dollars in which we're paying back.
That's right.
So when the mortgage is only 5.5% and inflation is 8%, that means we're getting paid 2.5% to borrow, right? We're literally getting paid to borrow money. But wait, there's more. It gets better than that. And here's how it gets better. Real inflation, I'm sure everybody watching and listening will probably agree that real inflation is somewhere in the neighborhood of 15%. Now, the CPI is manipulated down through weighting, substitution, and hedonic indexing, right? This is the way the government lies to us about the real inflation rate. And you don't have to go with my rate. Everybody has their own personal inflation rate because we all spend differently. But I say it's about 15%, maybe even 16%. So now we take the mortgage rate and we subtract it and we get a 9.5% profit. But as they say on those late night infomercials, but wait, there's more.
That's right. Go ahead. That's right.
Depending on what state we live in and what our tax bracket is, I'm saying that most investors are going to be in this tax bracket that gives them about a 2.2% kicker to add to this getting paid to borrow profit. And that means we're literally getting paid 11.7% to borrow money. Now imagine someone listening to Dave Ramsey, okay, who is good for the audience he speaks to, right?
Sure.
Because most of those people they've really messed up their lives. They have a bunch of credit card debt. They have expensive car loans that they can't afford. And that's stupid, right? That's bad. But the problem is you can't listen to Dave Ramsey about investing because he's clueless about investing. If you paid cash for the property, you would lose 11.7%.
Right. Exactly.
Right? And this doesn't include your return on cash flow, equity buildup, all of that other stuff, tax benefits, depreciation tax benefits, I should say. So it's way better than this. This is just the inflation example alone.
I think a lot of people are feared over debt and leverage. They see it's like, I don't want to file for bankruptcy. Well, here's your answer, folks. Do a lower LTV, take less leverage. Take leverage that you're comfortable with. And that's how you solve it.
The lower your return will be. And
Exactly.
listen, I got to say for the record, Ben, I don't like debt either, right? But I love debt that I don't have to repay because we can delegate or outsource the repayment obligation to our tenants. They pay the debt, right? They pay the mortgage. We don't.
Well, and it's how you structure your debt too. If you could have flexibility in your debt, and maybe if you want to feel more comfortable and not take on as much debt in a specific property or investment, that's how you get. Look, just like you said, Jason, and I want everyone to listen to this, is that when you are taking on leverage, if you're not as comfortable, take on less leverage and you'll change your yield depending on the cost of the capital. The other thing I think is important, you teach a lot, is the areas you should be investing in. So for residential real estate investing, what are some of the areas that you recommend to folks to focus on to achieve, the inflation, this what I call the delta between the real inflation and the mortgage rate.
Right, right. Absolutely. So if you want to stop the screen share for just a moment, I will grab a good data point for you on that. And
Okay.
let me just get to it here because I've got, it's always better with visual aids, right?
You know what I love about you? You're not only a guru and so well versed, but you're also like an economist. I don't think people even call you that. So
And let's think about that word economist, or what does an economist do, right? What is the study of economics really? It's the allocation of limited resources, the allocation of scarce resources, which, by the way, Ben, is another thing I absolutely love about real estate. It is a limited resource. Now, Will Rogers, there's a famous quote, buy land, they're not making any more, right? But that's not really what it's about. What I love about it is that the commodity value, you get to buy these commodities. And like I said, I'm a commodities investor, and I'll explain part of that in just a moment.
Sure.
But you alluded to it earlier, actually. When we buy the copper wire, the glass, the steel, the lumber, the concrete, the petroleum products, all these ingredients of a house, right? We could buy all those things on a commodities exchange. But because they have the real estate label on them, we get wonderful, very favorable long-term fixed rate financing. We get tax benefits. We get all kinds of benefits. We get income from them. We wouldn't get those benefits if we bought them directly as a commodities investor.
Mhm.
So very, very important. And if you want to share the screen again, I'll show you some of that stuff I mentioned.
Absolutely.
would you say in a lot of your leases, though, you want to, in this environment, especially in the areas where they have CPI growth, you're going to want to put in your leases that you'll have annual growth based on CPI instead of fixed annual escalations? Is that what you would recommend in this environment?
Well, if I could, I would do CPI times 2,
Okay.
because then you're going to get a more accurate rate of inflation, right?
By the way, if you get those in those leases, you're going to come work for my company, Alliance, because that's impressive. But no, I agree with you. Because like in our leases, if you could do CPI over fixed increases, especially in this environment, like for example, look in your backyard, Florida. In some of these counties, and based on certain CPI indexes, it's got to be 5, 6, 7% some of the growth right now, at least.
No, it's amazing how quickly the rents are growing. But what you're talking about is more applicable to commercial leases. On
Right.
residential leases, they're usually just a 1-year lease.
Okay.
So at the end of that year, you can raise the rent. I mean, if you're not in the Socialist Republic of California or New York, you can usually raise it to whatever the parties agree on.
Right.
In places like California, there are limits and so forth, but
Mhm.
you can usually raise it enough. So this is why income property is so great, because you get income, depreciation, equity growth, appreciation, and leverage. So the acronym is I.D.E.A.L, right? It's the ideal investment, but you get one more thing. You get inflation-induced debt destruction as well. And you asked about different types of markets and where
Sure.
to invest.
Mhm.
So I just wanted to go over that. Look, we are in a country that is very large and very diverse. And in a country as large as the United States, there's no such thing as a national housing market, right? You hear people talk about the real estate market or the housing market as if it's like one monolithic entity, right? It's just not. There are nearly 400 MSAs, or metropolitan areas, in the US. There are over 3,100 counties. There are over 9,000 cities and countless neighborhoods, right? And they all act very differently. The old saying in real estate is that all real estate is local. But to make it easy, Ben, we've identified 3 types of markets, just 3, that you can break the whole world down into, the United States, but the entire world. It applies to everywhere. And so these markets are um, linear markets. Now, these are these sort of slow, steady, profitable markets, cyclical markets that look more like a roller coaster, and then hybrid markets that are between the two. Here's what I mean by that. Okay. Let's just show examples. So, this is an appreciation chart of Memphis, Tennessee. This is a market where I've helped hundreds of investors buy properties over the years. And you can see this chart is pretty linear. It's pretty boring. Not much happens. There are some ups, some downs. The Great Recession caused it to go down a lot. Now it's up. Whatever, right? It's relatively stable, frankly. These aren't big variations, even Great Recession era, right? And here's another one, Indianapolis, another market where I've helped hundreds of people buy properties. And I've owned in both of these markets myself. These are linear markets. They are boring. The most exciting thing that happens in Indianapolis is the Indy 500.
Well, in Indianapolis is just slow and steady. You don't get these big swings. So it mitigates risk.
Let me tell you about a cyclical market. This is where I grew up, by the way. You probably know this, but maybe some of the others listening don't. I grew up in Los Angeles, California. Okay.
Right.
And LA, let's look at their chart. That's the same time period, right?
Yeah.
This chart is all over the board. It's up, it's down.
Well, and I think sharing with our audience, the key to investing is the ability to hold. Because if you look at this chart, look at the ups and downs, the moguls, and if you can hold it. So, for example, where you see that peak, and you could sell a property at the peak, just imagine what you could do. That's the benefit to me in investing in these roller coaster markets you mentioned.
And if you can time the market successfully, although I've never really known anybody who can, but if you can time it, the cyclical market, you're going to make more money. Here's the problem, and you really alluded to it. I have a strategy I call, very basically sustainable investing. Okay.
Yep.
And sustainable investing says that as long as you have, a reasonably good debt coverage ratio, right? Maybe 1.2, right? You're going to be in good shape because you can afford to sustain the property and hold it through the downtimes. And, real estate is a game of staying power. As long as you're in the game long enough, you're going to win, right? You're always going to win if you're in the game long enough. And so the cyclical markets definitely work well if you can time them. But the problem is because they're so expensive. And here's another phrase I created. We've all heard of the LTV ratio, the loan to value ratio, right? That's common. But I created a new one. I call it the LTI ratio, the land to improvement ratio. And what I mean there is, what is the value of the land versus what's sitting on the land, the house, the apartment, the office building, whatever, right? And that LTI ratio, here's how you always know if you're in a cyclical or linear market. In a cyclical market, the land is always very expensive. In a linear market, it's always very cheap. And here's some examples of these markets besides what I mentioned, by the way. Cyclical markets in the US. Most of the West Coast of the United States is a cyclical market from San Diego to Seattle. Okay. Most of it. The expensive Northeastern markets, New York, Boston, Washington, D.C., Connecticut areas that are expensive Connecticut areas, cyclical markets. Okay. South Florida, where I live, Miami, very cyclical. Around the world, Paris, London, Dubai, Hong Kong. Okay. These are the trophy cities that you always hear about. These are all cyclical. And the cash flow always sucks in these markets because the properties are too expensive. So they usually allow you to be sustainable as an investor. And linear markets are almost all of the rest of the country, or almost all of the rest of the world is a linear market. Most of the earth is a linear market. Now, some are a little bit in between the hybrid markets. Examples of those, Denver and Austin, now Atlanta as well. Okay. But you're just going to, if you're a conservative investor, you want to be in these linear markets. Those are the markets to be in.
What are some of the pitfalls of owning residential real estate as an investment from your experience? What do you see as some top pitfalls you could share with new investors? Is there a way that you qualify your tenants? Are you obviously background checks and credit checks, but what are some of the indicators that show where you'll have an issue with a tenant?
Yeah, most tenants are great, okay, but some can be problematic, of course, okay, and so you want to do good background checks. We really recommend that people self-manage their properties. A
Okay.
lot of them don't want to do it, so
So you're advising people to take calls in the middle of the night with plumbing and toilets?
I mean, I've had thousands of tenants, and I've
Uh-huh.
never taken a call in the middle of the night. First off, they really never call, they just email, okay?
Right.
Some of them I text with, okay?
Uh-huh.
And 100% of my portfolio now is self-managed, and I
Okay.
love it. I have a great degree of control. Now listen, I've had dozens of property managers over the years too, okay? And, e e I find that it's actually easier if you set it up right to self-manage your properties. But,
Okay.
to each his own.
Well, isn't there it's really an opportunity cost. It's where you want to spend your time. If you're looking for acquisitions or
Argument is that it takes less time to self-manage.
Interesting.
Yeah.
That's a good point.
I wanna
Well,
spend less time because when I have that middleman in the middle of the deal,
mhm.
he has a different agenda.
Right.
And there's an old saying, "You can't serve 2 masters." How can they serve the tenant and the owner at the same time? They're in a tough spot, you know?
so when your students or people that are ambitious and they're hardworking and they're bright individuals and they come to you for advice on how to attain achievement and success in investing in residential real estates, what do you tell them? Like what's the game plan for them to say, hey, if you adhere to this is what's going to create success? What does that look like?
Really, that is quantified pretty well in my 10 commandments of successful investing. That's why I created that framework. So, 10 things. And, if you do those, you're pretty much assured to win the game. I mean, look, nothing is guaranteed except death and taxes.
Right.
By and large, you're going to win if you follow the 10 commandments.
So all of us are works in progress. And one thing that you do, Jason, as a successful entrepreneur and speaker is you own it. You own your actions. You live your life how you want to. Was there ever a time where you had something go wrong and you're like, you know what, I don't own this? Like, what was that? What has challenged you in the past that allowed you to say, hey, I have to make a change or I need to wake up and do something differently in my life?
Yeah, that's a great question. And I have lots of things go wrong all the time. So, uh, by no means am I immune to problems and challenges. It's just part of life. Look, and, frankly, as much as we tend not to like those things when we go through them, it makes us better people. I grew up poor and, I tell you, I don't think I would be the person I am if I grew up rich,
Right.
okay? And, that's a warning to parents out there who have done well financially. Be careful that you don't mess up your kids, okay? Because, I've seen an awful lot of spoiled kids out there who just can't do anything for themselves, they're kinda helpless. And, they're gonna have to encounter their own battles in life, and they're not gonna be ready when when
Well,
when it happens.
Did you find your background on how you were raised and how you grew up it's really, can you look back now and say, hey, this was advantageous for me. It made me grind harder. It made me learn, made me really focus. There had to be a lot of tremendous benefits in order for you to get to this point in your career.
But at the time, when you're going through those hardships, it sure doesn't feel that way. You're
sure.
you're like, "Why am I being tested?" You know?
Right.
Why can't I just have the easy road? And, the other thing I'd say is, you look at the lives of other people and you ask yourself the question, compared to what? Right? And, their lives aren't so rosy either, believe me. And, we see it all the time in popular culture with these celebrities. I mean, how is it that you can be a famous celebrity, beautiful or handsome. You can have the world beating a path to your door. You get all this admiration from everybody. You're super wealthy, and yet you're depressed, and you're going to rehab and counseling all the time and therapists all the time. I mean, really, these people they have their own problems. Okay, nobody has a problem-free life.
No, no one does. And I think all of us have challenges that we have to overcome. And I think especially teaching real estate investing, whether it's residential or commercial, I always find the difference in people is persistence. I don't think you need to know everything. You'll find the resources you want. And would you say advice you give to your students or mentees is really pull the trigger, get out there and do it, put yourself out there, manage your fear, and just go out there and do it. And I think a lot of people are saying, well, I don't know how to do it, or I can't do it, or maybe I shouldn't take on this loan because I don't want more debt. Maybe I have student debt. And it's really a challenge for people. And I think if everyone who's listening out there can know, hey, just pull the trigger, jump in the pool, do your first deal, and you'll learn from it. And I mean, is that a lot of the advice you're giving people is like, just get out there and do it?
No question about it, Ben. And, I'm sure that has been a key ingredient to your success. You got to just do stuff. I mean, nothing happens, in the information age, the age in which we live, right? It is so easy to get access to good information now, usually for free or very inexpensively. And the world is awash in information, but all results come through action. They never come through information. Information is good. It could reduce your mistakes. It can accelerate your path. But at the end of the day, only you can act, and you've got to act, and you've got to take chances. There is no such thing as a risk-free life. There are only 2 points where we have security: before we're born and when we die. That's security, right? But in between, it's all risk. And I love their, and I'm going to mess this up. Just warn you, but you've probably read Earl Nightingale, I'm guessing, right?
Yes.
Yeah, he was such a great teacher, and just such a wise man. He was one of my original 4 mentors that really changed my life at age 17. Earl Nightingale, Jim Rohn, Dennis Waitley, Zig Ziglar. And Earl Nightingale's got this passage in one of his books, and he talks about how risk and success are at opposite ends of the same balancing beam, how you cannot have one without the corresponding weight of the other. And then he says, risk ups the ante, raises the greens fee, and limits the membership, but it makes playing more fun, and you seldom have to wait in line anymore.
I think that's awesome. It's fantastic. It's such a great quote. You did get it right. One of the things also that helps mitigate risk is, how do you teach your mentees and students to develop resources, whether it's a good real estate attorney, accountants, in residential real estate, inspectors or engineers, construction folks, people that can inspect the property, a good maybe a lender or banks or mortgage broker. How do you advise them to say, hey, surround yourself with great people and find these resources? How do they find these resources?
By referral is a good way, but even by referral, it won't always be the best. Okay.
Right.
And you are going to have bad experience. When you talked about hardships a moment ago, I'd say those are the biggest hardships. It's your vendors, and it might be your attorney, your accountant. I mean, look, sadly, we live in a world where very few people keep their word anymore. Very few people have integrity anymore. And if they do, a lot of times it's sort of situational, right? So you're going to get burned by these vendors. They're going to do a bad job. They're going to overcharge you. They're going to rip you off. They're going to lie. It's just unfortunate. It's the way it is. But you've got to just keep going. I see so many people when they have like one little bump in the road, they just like, okay, I'm going to throw in the towel now. It's time to give up. I'll do something else. And then they keep trying to do a new thing all the time, and they never get good at the one thing, right?
Right. Well, life, you're rewarded for focus. And I've learned that in our industry, in our business, that, I focus on medical properties and I get rewarded for it because I'm an expert. Even though I know other categories in commercial real estate and own it, it's really more of my forte, and you get rewarded for that. The other thing I would recommend to our audience, especially if you're getting started in real estate investing, is bid out different items of a transaction, whether it be financing or, you know, you need an inspection. In my business, it might be environmental engineer. That's how you can protect yourself. Bid out resources, and that you'll see what the market is. You'll measure who you like. Get references. I feel the best way people are lazy and they forget to get references. If you're going to hire, so if you're investing in residential real estate and you're looking for, and say you're going to work with a mortgage broker, and you're depending on him to help you shepherd it through the process and actually align the lender to get you closed and all the third-party reports you need to buy that investment property. Get references. Talk to other people that have worked with that person that you're about to hire. And I think that's a great way to mitigate risk. And I think a lot of people forget about saying, well, who else have you worked with?
Yeah. And just try things. Just keep doing stuff, and some will work out, some won't, and you'll learn along the way.
Well, Jason, we always wrap up with 3 questions. If you had to close your eyes and roll back to when Jason Hartman was 16, he was this handsome, bright, intelligent person in Los Angeles. And you can go back and you can say to yourself, what would you tell being Jason Hartman now, what would you tell your 16-year-old self?
Gosh, there are so many things, but I certainly would have purchased more properties. That would have been the easy one to do.
Okay.
And you know, when you have extra capital, you gotta trade the dollars for assets.
Mhm.
You know, and my favorite asset is income properties. So that's definitely one thing I would tell them. And then, you know, I would also say, just really be careful of how quickly you trust someone. I've certainly been burned a lot of times. We all have. I hate to sound cynical when I say that, because there's lots of great people in the world, but there's lots of not so great people too.
Well, you just have to do your due diligence and get referrals and qualify people and let people's actions speak louder than their words. That's what I learned. I think and you know, and what you're touching on is human nature. Yeah. And we all battle human nature. And when you find good people, folks out there, gravitate to them, grab them, treat them well, and don't lose them. That's what I always say. So next question I have is, it's your last day on earth, God forbid, and you have your last meal. What is it? What are you eating? What are you drinking? Where are we? You and I are sharing it. What are we eating?
Well, it'd be like like the death row inmate that's drinking diet.
Right. No, this is more of this. This is like you could be anywhere eating anything. You know, what is that? What's your last meal? You're like, I gotta have this.
You know, I'm not like any kind of super foodie or anything, but I'd say I'd probably go with Italian food.
Nice. And what do you drink? What are you washing that down with?
Oh, martini.
A martini. Look at you, James Bond. Like, I love it. So
shaken, not stirred.
Yeah, absolutely. You and I could definitely have a meal together. So behind me, we have a whole music studio. I got a piano, I got a drum set, I got 6 electric guitars. And if you were sitting with me in the studio and we can invite any musician or any band, they could be deceased, they could be existing, whoever, who is playing for us right now in our studio, for you and me.
There's no question it would be Rush. I mean, the most talented rock band that has ever walked the face of the earth is Rush. And if it's modern music, I'd pick Avicii.
Yeah. Neil Peart was something else. And to have Geddy Lee in the studio, oh man, that would be something else.
Those guys are musical geniuses. They're totally amazing. I mean, look, folks, if you don't know what we're talking about, you have got to check out Rush. I mean, look, decades later, I still love this band, okay? Because their lyrics are so educational. They are literally excursions into philosophy, mythology, literature. Rush is what got me into Ayn Rand, and I read so many of her books and pieces. And yeah, Rush is incredible. They really are.
Well, they used to play concerts. They would go on and play for like 4 or 5 hours, some of their shows. I mean, Neil Peart would have a drum solo. He would go on for a half hour. It was unbelievable to watch.
You don't have to tell me. I've been to 29 Rush concerts.
You're a groupie. Jason just came out and told us he's a groupie. That's wild.
Yes, and I wish I could still be a groupie, but I don't think there's ever going to be another Rush concert.
So let's promote you a little bit. Where can people find you and learn about investing in real estate and in residential real estate? Because you offer so much value, so much experience, and I want people to be able to really benefit from your knowledge. So what's the best way to find you?
So my main website is jasonhartman.com, just my name, jasonhartman.com. And then my podcast, The Creating Wealth Show, is my most popular show. And that's, of course, on any podcast platform. I'm also on YouTube. The Thought Police haven't censored me too much yet, but they have a little bit, but I'm still there. So you can find me on YouTube, podcast, or my website directly.
All right. Well, keep rocking, Jason. And it was so great to have you on the show. For more episodes of I Own It, feel free to click on the subscribe button on the bottom right. Also, feel free to go to benreinberg.com for more information on I Own It, Alliance CGC, and all the information you could find on your health, wealth, relationships, and business. Jason Hartman, thank you so much for coming on today. You're always a wealth of knowledge. It was great seeing you, my friend, and wish you the best and have a wonderful holiday weekend, and we'll see you soon.
Likewise, Ben, thank you. Keep up the great work, and to you and all your listeners, happy investing.
Thank you for listening to the I Own It podcast with Ben Reinberg. To hear our past episodes and connect with Ben, visit benreinberg.com.